All right. Hey, everyone. This is Mark here with Markshomeliving, and welcome back to another Real Conversations with a Realtor. And today's guest, ladies and gentlemen, give a round of applause. We have here Ben Rubenstein. What's good, Ben?
Oh man, I'm doing great. It's a beautiful day, November, my birthday month, so we're doing fantastic. Super
Woo!
excited to be on your show, Mark. So thanks for inviting me. And I think we've got a lot of great things to share and go over today.
Absolutely, absolutely. So for those of you guys who watched, I had on Annette Hunt last time, and I work with Annette Hunt as well. And I've recently started as well working with Ben, and Ben is what we call the wizard, right?
That's
That's
right, baby,
it.
making the magic happen. That's right, the mortgage wizard. And
Absolutely, Ben is the wizard, man. So Ben, we just have some couple questions for you to answer, just to give some insight to buyers who are looking and getting into the market, just providing more knowledge to a lot of people because things that we find common, it's just uncommon, right? Because we're in the business 24/7, and what we think is just the regular day today. Other people are like, what? What are you talking about? I didn't even know that was a thing, right? So we just want to make some clarification, answer some questions, have some good time, spread the knowledge, spread the wealth. Yeah.
yeah, that's a good point, Mark. I've been in the industry for 20 years. And I would say, 10 years ago or 15 years ago, even as a newer loan officer, you just don't know what you don't know, right? And there's some information, some incredible things that, if you just don't know it, that it is what it is. But that's why we're here to help inform and share that information. And it's going to be super valuable too.
Okay, Ben. So just tell us a little bit of who you are, how long you've been in the business, and so on.
Yeah, so I've been in the business for 20 years, the mortgage wizard. I started in banking when I was 17 years old. I've been in banking and finance for a long time now, I guess 20 plus years. I'm a father of five, family dude, and I am just immersed in the world of mortgage. I'm a broker, and we offer every product and service in terms of a mortgage that you could possibly think of, from first time buyer options. We'll get more into that in a minute, but the sky is the limit. Down payment assistance, whatever you can think of, residential, commercial, we offer those types of options and different things.
Okay, solid, solid. So I have a quick question for you here. All right, so let's start off with this. Okay, what's one big misconception in your view you think buyers still have about the mortgage process today?
I would say a lot of buyers are more intimidated by the mortgage process and worry quite a bit about, is it going to be an approval, or, you know, how are we doing things, or how do we get to the finish line? There's the big worry, right? The stress and the worry. And that's where, as a loan officer, we want to eliminate that from the very beginning. When we have a really good interview, customer loan officer interview, and ask all the different questions, get to know our customer and their goals and really what they're trying to achieve, big picture, and taking it down granular to dollars and cents. What's my payment? How much money do I need to close? And then just being more prepared about knowing about the steps up front, then the elimination, the worry and the frustration goes away. So I think that would be my number one. The misconception is out there is, loans are a lot easier than we think they are when you're working with a pro, ultimately.
Okay, cool. Okay, Ben. So I have a quick question for you. This is pertaining to there's supposed to be some major changes with Fannie Mae updates starting November 16th. Okay, so explain to them what is Fannie Mae and what these November 16th changes are going to look like for everyone.
Yeah, great question, Mark. So Fannie Mae and also Freddie Mac, those are the two companies that back a conventional loan or traditional mortgage, conventional loans. They are the mortgage-backed securities those companies are doing the buying and selling of loans and packaging them into bonds, which are referred to as mortgage-backed securities, right? And those companies, along with lending leaders, have decided, for conventional loans specifically, that the credit score alone will not determine an approval or decline. So what's going to happen is we'll be looking at the total credit profile in terms of mortgage guidelines. So we're going to look at the credit history and really deep dive in on, payment history, credit usage, credit inquiries, and ultimately make the lending decisions and underwriting based on the last 7 years of history more dialed in, rather than just looking at credit scores and coming up with an outcome based on a credit score alone. So that's a fantastic change for consumers. It's going to help a lot more people get into homes and hopefully make a difference in the marketplace.
So how should someone actually prepare for that type of change? So if they're not necessarily going to be using credit that much, like how does the buyer adjust? How does that change the activity of the buyer?
Well, at the end of the day, you do want to have the best credit scores you can possibly have, because that can still determine the interest rates, right? So interest rates, the cost of interest rates, there's a scale that's designed to basically determine the pricing. And so, from a long-term standpoint, it is really important to talk about your credit and be educated on, how to improve your credit scores to the absolute best of your ability. At the end of the day, paying every month on time, not having any late payments, that's the most critical thing. Um, and then as far as preparing, though, talking to a financial expert, someone that's knowledgeable, such as a loan officer, or someone in the banking industry that can help give additional advice about your credit. That's an important piece. And then ultimately, working towards a pre-qualification or a pre-approval. A lot of customers wait until like, oh, I'm almost ready to write that offer. But I really encourage everyone to talk to a loan officer early, years in advance even, just so we can look at not only the credit, income, assets, and then even dive deeper from a budgetary standpoint. If there's something we can do to help you reach your financial goals and evaluate your situation. But then when I go to sleep at night, I know everything that I need to do to work towards the home purchase or the financial goals down the road. Um, and a lot of folks tend to put that off. I think, money and finances can be a tough subject to discuss, but finding someone that you can trust, that's an expert, that can really help you, can go a long way.
Okay, so you said a lot in there. I mean, that's it's a lot. It's a lot to take in. So let's break it down, right? So if I'm a buyer, I make six figures. I make $100,000 right off the bat. I have some student loans. I have a car payment. My credit is, let's just say I'm able to qualify. So I'm at 640. All right. But I am not sure what to do. I'm nervous. I'm kind of scared, right? How would a person know that they're in the right position, right? What are some indicators to show that they're in the right position, that they should actually, yeah, you know what? I'm actually in a position to go purchase. What does that look like? You know what I mean? So we might have, as a buyer, we might have certain things that we look at and be like, oh, I need to have this much money saved. I need to have this, and need to have this. Versus a lender saying, hey, you just need to have this, this, and this, right? So, what are the key differences, right, that you see that are triggers, are good triggers to purchase versus what a buyer sees as that what they consider good triggers?
Right, right. Well, I think number one, we talk about affordability. If you're currently renting, how much do you pay right now versus what's the mortgage payment going to be? That's the biggest concern right now with, the higher interest rates that we've seen. So what I would say is, first looking at a budget bottom line, your housing expenses are recommended to be about 25% of your take home pay. And that being said, in the lending world, we can finance up to 50% of your gross, right? So how do we break that down? And that ultimately comes down to having a very lucrative and detailed budget. Back in my credit counseling days, we wrote budgets and we dialed that thing down to not only monthly expenses, but annual expenses and things like that. So if you're confident about your budget, how much I'm paying for a mortgage, which we can get to the bottom of really quickly, um, you know, the perfect situation would be having 12 months of income in savings or more, right? But how many people actually have a year of income in savings?
Correct. So what would you say? What would you say is the bare minimum? What's the bare minimum entry? Like, all right, cool. I got this much. That would be a starting point. My number
Yeah,
would be because they still need to, if they're going to purchase a house, we still need to do the transaction,
right.
right? So you
Yeah,
still need at least $400 to get an inspection. You still need
right.
like call it rough $800 for an inspection. I mean for an appraisal, right? Because you have to pay that up front, right?
Yep.
And earnest money. So anywhere between 1,500 to $5,000, right? Some new bills, let's say, if you're going conventional, you need $7,000, right? Earnest money put down, which is a part of the down payment money. For people who don't know, earnest money is a part of your down payment. But that part of your down payment, you have to pay up front to get under contract to show the seller that you are deeply interested in their property. So the more you put down, the better it looks for the seller. But that money is now contractually tied because you can lose that money if you do something, if you breach contract, right? So which you don't want. So
Yeah.
what do you think the bare minimum should be?
Well, the true bare minimum is actually a couple $1,000s, maybe $2,500. That's the absolute bare minimum,
Okay.
to buy a home, to get in, assuming we're doing down payment assistance
Uh,
and getting the down payment and the closing costs covered, right?
okay.
Um, so from a qualifications, can I do this standpoint? Absolutely. A couple $2,000 to $3,000 is your
Okay.
bare minimum
No, for
point.
those people who have some sort of money, not a lot, they have some sort of money, right? If I just, because you have some situations where it's going to be a seller who is now a buyer, right? And they're a first time seller. They're first time seller, they're selling their house. Now they have $250,000 of money that they can put towards their next house, right? Ideally, how much of that should they use towards their home versus say, or towards their purchase for their new home versus to say, you know what, I'm just gonna put just enough to come out of PMI, um, or my brain goes many places because I'm thinking of so many different clients and so many different situations that I've had.
Yeah.
But if you're sitting on a nice 200, what how much of that should you use on your next purchase if you're selling a house now moving into a new home?
Yeah, good question. It does differ per client. Like every client's situation is going to be quite different and unique. So, with that kind of cash coming in, I do generally recommend 20% down to avoid the private mortgage insurance, because that money doesn't, paying private mortgage insurance benefits you in no way. It just benefits the lender, right? So, taking some of that equity position to avoid PMI, keep your payments down to a reasonable standpoint. And then with all that equity that you're bringing in, that's a really good time to have a conversation about, paying off some debt, investing money, revisiting your retirement and investment portfolios to see if we want to bolster those up, and even talking to your tax advisor, because that's another thing to look at. Depending on how you use the money, where you place the money, that's a life-changing opportunity when you sell a home at that point. And buyers, sellers how often they buy and sell homes, every 3, 5, 7, 10, 20, 30 years, right? These are life-changing opportunities that, we really want to take a step back, look at the full financial picture, and we've done some amazing things for our customers. So
Okay.
I'd say every
So
situation is different, but
yeah,
yeah,
everybody's
I mean,
situation is going to be definitely different. So then, okay, so let's just talk in generalities here. Okay, so if if I'm a buyer, I do have some money, right? I can get into the market, but I'm looking to time the market right. So I'm thinking about rates. I'm thinking about how many houses are available. I'm thinking about supply and demand. For a person like that, what one piece of advice you would tell them, or where should they go to find reliable information? So so two things. What's one piece of advice you'd give that person? Hey, if you're going to be timing the market, you need to check for this. And then for that person, they're looking for reliable information aside from us, right? Coming to us. Where should they go get that information? So let's start with timing the market. Like what should what advice you'd have for that person?
yeah. So number one, timing the market, that's something that is incredibly difficult to do. So, the funny thing is the best answer to time the market is you should have bought 4 years ago. Like that's that's always the best answer. Like, well, why didn't you buy 4 years ago? Right? Like, I mean, if we all did that, we'd be
Right.
making hand over fist thinking back, wow, why didn't I buy 10 houses 4 years ago? Right. But ultimately, the market is always changing. It's a 2 to 4 year cycle generally. Um, but, with depreciation now being a big deal, you know, between your real estate agent and the statistics that we have, that's the really important thing. We have specialized reports that we have access to, right? Where we can look at, how many homes are on the market, how long are they sitting, and those factors, right? Rates are still in the higher realm of all-time highs for the last 20 years. So we're at that higher point where, if we can get an amazing deal.
This. All right. So what we're gonna do, Ben, is just I'm gonna go through these myth busters. Okay. So we're going to do these myth busters, yes or no. All right. So you give me your off the gut response, Ben, so we can help these buyers make some great decisions. All
All
right.
right, let's do it.
Okay. All right. So here we go. You need a perfect credit score to qualify for a home.
Absolutely not. No.
Okay. What's close to perfect?
No score.
No score. Nice.
They
Nice.
have no
Okay.
score. We're good, baby. Let's do
All
it.
right. Myth or fact? You must have 20% down to buy a house.
No, absolutely not.
Okay.
Zero down.
Okay. If you've changed jobs recently, you can't get approved.
Absolutely not. You can get approved. Most
Okay.
definitely.
Okay. Student loans automatically disqualify you from buying.
Absolutely not.
Okay.
Never.
All right. It's always better to wait for rates to drop before buying. Ooh.
Oh, I would not wait for rates to drop. That's a scary situation because everybody and their family is going to be trying to buy. Like, I've got some stories for you, but we'll stick to the context here.
Okay. Like today's price is the best price. All right. Okay. Here's another one.
Probably.
All right. You can't always use the gift money for your down payment.
Um, that's true. You can't always use it, but for a new primary residence, you absolutely can.
Oh, okay. That's good to hear. All right. FHA loans are only for people with bad credit.
Oh, that's not true either. No.
I know
I
it's
mean,
like
anyone
so
can utilize
weird
an
why some
FHA
people
loan.
think
If that's the best, most financially savvy way to get it done, then we go FHA, baby.
it's the right answer. Correct. Okay. You can't buy a home if you have any debt.
Oh yeah, I mean, absolutely not. You can have lots of debts.
Okay. All right. Here's
Not
another
not
one.
that you want them, but go ahead.
Once your credit is pulled by one lender, you can't shop around.
Not true. No. Yeah, you can totally shop around for like 2 weeks, and there's no impact to your credit score. It doesn't count as an additional ding. So shop all you want.
Okay. And a lower interest rate always means a better loan.
Oh, that's not true. No. Yeah, no.
I know that's
That lower rate might cost you 30 grand. There's a
yeah.
sliding scale of rates available. So that's something we should look at, and we'll give you the pros and cons, and then you'll make a decision. So good question.
So I think that's everything that I have, and I wanted to talk with you today about Ben. I appreciate your time and coming on here, having some real conversations about our real estate market and what's actually going on in Phoenix. And for those of you who are looking to buy, who are looking to get into the market, or just have some concerns, please look at the link below. I'll have the link there. It's in the description where you can get access to myself and Ben and talk and get engaged. Or if you're looking to purchase a home, we can get that locked in ASAP. Is there any one piece of advice, Ben, you want to give to the people?
I think the best advice I can give you is to talk to an expert, whether it's the mortgage wizard or someone who's really knowledgeable about finances and mortgage, so that they can help you plan, whether it's now or later, whether it's 10 years down the road. The more advice and knowledge you have is power, and what you do with that is ultimately your choice, but we'd love to help you.
Exactly. And I don't want people to be paying an ignorant tax. Okay. It's very costly. All right. So, ladies and gentlemen, this is Mark here with Markshomeliving. I appreciate you guys so much. We'll talk soon.